Hey, what's up guys? My name is Vish Patel and welcome to my channel. Today I'm going to talk about the COVID-19 impact on the financial market and what could be the various better option for the investment in this uncertain time. COVID-19 resulted in the social isolation within the countries, closed borders, loss of businesses, loss of employment, industry-wide shutdown, and many more disturbing economic effects. Government across the globe initiated fiscal and monetary stimulus packages to fight the falling economy affected by the coronavirus. Volatility in the financial market spiked heavily after coronavirus spread across the globe, and it is difficult to estimate the extent of the economic damage caused by the global event. The extent of the downturn of financial market could be felt over many years. During this uncertain time, one of the best way to secure your financial future is to invest long term. Warren Buffett says you should invest in the stock for minimum 10 years. That means long term. It is long term investment where any investor can build long term wealth. By thinking and investing long term, you can meet your financial goals and increase your financial security. Since month of February 2020, market has become extremely volatile, and this time volatility is so brutal where billionaire investor Warren Buffett, who also sold his stake in the airline industry. The biggest question is now, what is the best investment strategy in this uncertain time? As an investor, you should looking for the higher rate of return. One way you can increase your ROI is to hold your investment longer. The longer holding period gives you more time to ride out the ups and downs of the market. Also, S&P 500 index has returned at 10% over for a long period of time. Especially during this volatility time, here are some type of investment where you have more probability to get the higher return. The first one is a growth stock, second one is a stock fund, third one is a dividend stock, fourth one is a real estate, fifth one is a small cap stock, and the sixth one is a robo-advisor portfolio. Let's go one by one. Growth stock. Growth stock can give you higher investment on your return. Many startup and technology company has possibility of the higher growth. Growth company always invest their profit back into the company expansion, so they do not always give the dividend back to the customer. If you're going to buy individual stock, you want to analyze the company carefully. This type of stock has higher volatility. You should have a higher risk tolerance and a commitment to holding this stock for at least for 4 to 5 years. You can say that the growth stock are higher risk and a higher reward type investment. Company like Google, Facebook, Amazon, Netflix are the higher growth company. The next one is a dividend stock, where growth stocks are the bullet train of the stock world. Dividend stocks are regular tram of your local city. They can achieve solid return, but they are unlikely to speed higher as fast as growth stock. Dividend paying stocks are more stable and they produce regular income, and the base stock grows that dividend over the time, so you can earn more than you would with the fixed payout of the bond and a CD. There are some risk and a reward. While dividend stocks tend to be less volatile than growth stock, also a dividend paying company is usually more mature and established than growth company, and so it's generally considered safer. Some good company out there, Walmart, Procter & Gamble, J&J, JP Morgan, Coca-Cola, Pepsi, PPNL, they are the good company in the dividend stock market. The second one is a stock fund. Stock fund are either ETF or mutual fund, and these are great option for investment. If you buy a broadly diversified fund such as S&P 500 index fund or a Nasdaq 100 index fund, which are best mix of high growth type of stock and others. These type of diversified ETF and a mutual fund are generally be less volatile compared to individual stock. There are some risk and reward. A stock fund is less risky than buying individual position, but it can still move quite a bit in any given year, perhaps losing as much as 30% or even gaining 30% in some of its more extreme years. Here are some example of stock fund. Vanguard 500 index fund, which is VFIAX, Schwab S&P 500 index fund, SWPPX, Fidelity 500 index fund, FXAIX. There are other good investment is the small cap stocks. Small cap stocks are smaller company stocks, and they have the potential to grow quickly in the emerging market over the time. In fact, retail giant Amazon began as small cap stock and made investor very rich. Like high growth stocks, small cap stocks tend to be riskier. Smaller companies are just more risky in general because they have fewer financial resources, less access to capital. So real estate is the another sector where you can invest long term as well. When overall financial market is in trouble, there are some opportunities open up in the real estate market. Trouble in the financial market means lower the interest rate, and you can finance the investment property as much as lower rate. Again, real estate investment require higher initial capital and the long term investment horizon to get the best return. The last one is the robo-advisor investment. Robo-advisor are another great alternative if you're busy with your current jobs and a current business, and if you do not have much time to do research in the market, this is the best option for you. With the robo-advisor, you will simply deposit money into robo account and it automatically invests it based on your goals, time horizon, and risk tolerance. You will find out some questionnaires when you start so that the robo-advisor understand what your need from the service is, and then it manages the whole process. The robo-advisor will select funds, typically low-cost ETF, and build your portfolio. With the robo-advisor, you can set the account to be as aggressive, moderate, or conservative. So these are the various options on the long-term investment. Make sure you do your due diligence before you select any investments. And I hope that you have liked our video. Make sure to hit the like button and subscribe our channel to see some good video like this. Thank you.